So this webinar will be recorded and recording will be available later this week on ARIVE's support website. Today, we are fortunate to have two experts from two of ARIVE's lender partners, REMN Wholesale and the Loan Store. They are both great lenders. They only do wholesale. So if you're not signed up with them, I would highly encourage you to evaluate if you can get signed up. Our host of webinar today is Amy Hulett from ARIVE. So without further ado, I'll pass it over to her. Amy, do you want to introduce the panelist?
Yes. Hi, everyone. Thank you so much for joining us. We are really excited to be able to share with you a lot of content about non-QM. There's a lot of borrowers out there that can benefit from these products. So we have a pretty robust lineup of products to review with you. We have Julia Renfrey and Jamie Derringer. If you could please introduce yourselves, tell us a little bit about your background and the companies you're with. Jamie, if you could start, that would be great.
Yeah, I'm the director of sales for the Loan Store. I've been in the business since 2001. I've done a little bit of everything. I've been on the operations side, mostly on sales, but I've been a broker. I've been an AE. I've done basically everything that you can do in the wholesale side of the business with a little bit of retail.
Perfect. Thank you, Jamie. And Julie, I apologize. Julia Murphy. Can you please introduce yourself to us and tell us a little bit about your background?
Yeah, no worries. So I'm Julia Murphy. I'm an account executive at REMN Wholesale. I have been with REMN for just about 7 years. Great company to work for and great company to work with.
Great. So we've lined up some questions to review with our group today. If you can please queue up our questions.
Yes, I will, Amy. If anyone else has any questions, there is a Q&A tab at the bottom. So feel free to ask any questions you might have. We will take them at the end, but we'll go with some of the questions we put together to begin with. So Amy, go ahead.
I think you're on mute, Amy.
Amy, you're muted.
You're still on mute.
You're still on mute, Amy. So maybe I'll take over. So and we'll see if she can get her microphone fixed. So maybe we'll start with you, Julia. Why is non-QM so important now, and why should brokers care about non-QM in the current market?
Yeah, so non-QM I think is super important now because it serves a market that is not served by other products. So there are a ton of self-employed borrowers and real estate investors that cannot qualify for Fannie Mae loans or FHA loans, for whatever reason that may be, whether it be income related or credit related. But there's a whole market there that if you're choosing not to do non-QM loans, you're just disregarding this whole market of loans and people that, we could be helping.
Jamie, anything you would like to add? Why are these important now?
Yeah, I mean, there's a lot of great borrowers in the non-QM space that, like Julia said, they don't qualify for traditional mortgages. That doesn't mean that they're bad borrowers. Like their assets don't qualify certain ways, their income doesn't qualify certain ways. Doesn't mean they're bad borrowers. There's great borrowers out there with good loans. It just takes people to get in front of them to show them that.
All right. And are we back into the recession or the crisis of 2008? Is this non-QM same as the subprime lending we did, or is it different? Any thoughts on that?
It is certainly different. Yeah, this is not subprime, pre-2008. It's a different kind of product, totally different guidelines, definitely way stricter than a subprime product would be. I think these are geared more towards, credit-worthy borrowers that are, self-employed and just not claiming enough income on their tax returns. They're certainly not geared towards, derogatory credit, or subprime, that kind of thing.
All right. Looks like Amy, are you back? Yes.
Sorry about that. My screen was just locked. I was not able to unmute myself, but thank you.
Yeah, we just get started. You want to take on? We just talked about why is non-QM important right now. So we're going to look at different non-QM programs. That's where we are. Do you want to?
Yes, perfect. Yes. So there's a lot of different non-QM programs that are out there. Both of our Lenders offer quite a variety of different products. So if we can kind of jump into those, we're going to talk about all of the ones that are on the screen, and each of our panelists will be able to kind of share what that product looks like, type of borrower that would fit into that product, and maybe some highlights over the program details. So who would like to kick it off for us?
I'll start.
Jamie?
At the loan store, we have two. We have DSCR and we have bank statement. We're more of an A paper lender, so we look for higher qualifications. To make up for that is we offer great pricing on them. So for us, a bank statement, we're at a minimum of a 680. I know some places do go a little bit lower, but we offer, again, a better rate for a higher qualified borrower. So you're looking at like a 680, max LTV is 85%. But our mindset is we're not going to offer a program that we can't be a top level in execution and pricing on. So that's more of where our guidelines fall. On our DSCR stuff, very similar. Max LTV 80%, minimum loan amounts 175,000. We do allow foreign national on that. The big thing with our DSCR is we have a ratio of 1. So as long as it covers the debt, you're okay. That's a big win. I know some places are a little bit higher and it'll keep you from qualifying. We just have a set ratio of 1. But those are our two big non-QM products that we focus on.
Okay, perfect. So your foreign national falls under the DSCR as well?
It's only for DSCR. We don't offer it on bank statement.
Okay. Okay, perfect. And then do you have any programs for agency turndowns, like niche things like non-warrantable condos or any type of credit event waivers?
Not really. I mean, they're kind of subject to. We do have some exceptions that we can make, but nothing that we would actually like market as being like, this is something that we do.
Gotcha. Okay, cool. Julia, would you be able to share with us some insight into some of these products that you have?
Yes. So we have all of the products shown on the screen here. So bank statement, 1099 only, asset qualifiers, debt service, P&L product. We also have a full doc product that, has some of that Fannie fallout. So the non-warrantable condos, the recent W-2 to 1099 conversion is a big one. Just a lot of great ways to make loans work here. I think that, the big picture with non-QM is that if you have a loan that you think is not working elsewhere, whether it be Fannie or Freddie or FHA, you certainly would not give up on that loan until you've tried a non-QM product. There are a lot of different, Fannie fallout or FHA fallout guidelines here that, we would be able to have a loan that's, doable under the non-QM product. I'll kind of fly through these options quickly. So bank statement, 12 and 24 month. A couple different ways to calculate income there, a couple different expense ratios we can use. So like we'll default to 50, but if you can get a CPA letter that says, I prepared the returns, the expense ratio is actually only 10%, then we'll use that. There's a lot of different ways to make these work. We certainly try to make every loan work. 1099 only loan. Again, this is another good one. Most people just stick 1099 borrowers into a bank statement product. But 1099 actually can be an easier loan a lot of the time. We're just taking 75% of the gross deposits on the 1099 instead of going through 12 months or 24 months of bank statements and deposits and sourcing and all that. Debt service is, your traditional debt service loan. We do have two options for a 1 and above debt service, and then also a 0.75 to 0.99 option. Obviously, the pricing will get a bit worse when you get below that 1.0 debt service coverage ratio. But, the loan's doable. So if you submit a loan and then you order an appraisal and it comes in low, you want to make sure, it's still something that you can do. Asset depletion loan, traditional asset qualifier, no income, no employment, no DTI. We're just basically determining how much you need in the bank in order to qualify. Foreign nationals like Jamie, we do those under the debt service product only as well. So foreign national, we consider somebody to be living and working in another country that's just purchasing or refinancing an investment property here. And then the P&L plus 2-month bank statement, it's a fairly new one for us. A couple months ago, we got that one. It's a great product, a little bit different than the bank statement loan. We're just looking at the P&L that the CPA prepares, has to be the same CPA that prepared the returns, and just comparing that P&L, we're calculating income with that, and then 2 months to support that. So yeah, sorry, I know that was a lot of info quickly.
No, there's a lot of programs. It's going to capture a lot of different borrowers that have needs outside of QM products. So I think it's fantastic. I have a question. Is this something that a loan can come in under a certain product and be moved into a different product? Or is this something you recommend that they reach out to you beforehand for structuring?
I would always prefer reaching out beforehand as far as structuring goes. The only time that it gets tough is like if we're flipping like bank statement to debt service, we've kind of already seen the income. So it's hard to, as underwriters would say, unsee what we've already seen as far as income goes. So if we're flipping from like a bank statement program where we're calculating income to a debt service program where we're not, that could become a potential issue. Bank statement to 1099 is fine, or other way around. Anytime there's income involved, it's fine to switch back and forth. It's really just going from those like income products to no income products where it gets tough because we've already seen it. So if you're not sure on something, I say definitely come to me beforehand. The P&L product specifically, I'll use that for an example. That product, we calculate income, and then the income that we use is based off of the income that the underwriter calculates and the income that's listed on the 1003. They use the lower of the two. So if you list income on the 1003 and then we calculate income that's $10,000 a month higher, we're stuck using your income from the 1003. So like, I know how to use the income calculation worksheets. I tell all my brokers that want to use a P&L product, I'm like, send it to me first. It takes me all 5 minutes to do. I'd rather calculate the income now and know that we're, submitting the loan with the right income. So yes, definitely, summary of that, definitely talk to me first about it.
Definitely. So AEs are valuable. Your sales team is valuable. Reach out to them with those scenarios ahead of time to make sure that you are not sending in documentation that could potentially kill the deal and cause a restructure. So good to know. Okay, great. So our next question to pose to you are, what are turn times for non-QM? A lot of brokers and loan officers, have an assumption that maybe these are just super difficult. They take a really long time to close. So they're leery about getting into this product because of that, maybe old reputation for what subprime used to be and whatnot. But non-QM is very different. And I know that you guys as lenders definitely handle these very well. So if you can kind of each talk about your turn times and then maybe explain, what you offer to brokers as far as a scenario desk. Jamie, if you'd like to help us with that first, that'd be
Yeah, so we have a full scenario desk. It also handles our income calculation as well. So it's a full suite. Just like Julia said, though, always bring it to your AE first. Have them help you vet it out, answer any questions up front. If they don't know, they'll kick it right over to the scenario desk for you. You'll get an answer within, we say 24 hours. Most of the time, depending on the day, you'll get the same day responses. If they are actually calculating income, give them 2 days just to make sure that they're calculating it right, because they'll do it twice just to double check themselves. But yeah, it's a full suite as far as talking to your AE. You have the scenario desk behind you. You can respond to them. It's not like, hey, we've calculated it and we've done this and here's your response. That's it. You can actually have a conversation with them back and forth. If you have a follow-up question, they will respond to you, things like that. So we try and support everybody as much as we can, because non-QM it's hard to understand, and it's not new, but it's catching on more and more, and people that have never done it or start to get into it now. So it's something you have to take your time with.
definitely. Support is very important. So Julia, what's it like at REMN?
Yeah, as far as turn times go, we are less than 24 hours on initial approval and condition review for all products, whether that be, non-QM, Reno, HELOCs, all that. As far as the scenario desk, works very similarly to the one that Jamie described. So we have a help desk that basically you can submit either a scenario to or an income calculation request to. So if it's just a scenario of, can I do this loan, whatever the question may be about guidelines, we'd pass it to the help desk. If not, we'd send it to the income scenario desk, and they calculate income for us prior to submission. So basically you would just send me the 12 or 24 month bank statement or 1099 or P&L, whatever you want calculated. And they'll do that prior to submission. And that's, they all respond within 24 hours as well.
Okay, good. So brokers, LOs, processors, you're not left hanging. Definitely reach out to these lenders to use their scenario desks and their tools to help you. That's their job, is to get these loans structured for you properly and closed quickly. So great. Okay, so what brokers love are real world examples. We want to know, what loans are actually being closed. What do these borrowers look like? What do these loans look like? Did they come in a different way and you helped save the day with a non-QM product? Or is it just a loan that came in that, maybe others were not able to close, that you were able to really, make this broker shine? So Jamie, do you have any examples you can share with us?
Yeah, we've had two that are fairly recently. They're from December, but the first one, I don't remember what lender it was at, but they had it at a different lender, and they had apparently a max financing cap on their DSCR of 10. We go up to 15. So they ended up talking. One of the AEs had just happened to reach out, was just having a conversation with them, and he said he was dealing with the fire, as brokers tend to have to do sometimes. And he asked what it was, and it was just he had a loan blowing up that he thought was about to get cleared to close, and find out that they were over the max finance properties. They brought it over here. We ended up closing it in like 7 days. So that was the first one, is just allowing the 15 max properties. Another one was just the ratio. Somebody had submitted a loan somewhere else. They had a cap of 1.25, and we ended up bringing it over here, closed in about 2 weeks because our cap was only 1. So they were going to have a loan denied to a loan that was saved just because we have the ratio of 1, where they were covering just the debt, but we allowed them to do it. So it's just a way to save another loan.
Yeah, that's really great. It's definitely interesting to see all the different parameters that non-QM lenders have. And so there's not just one box that fits all, and everyone has a lot of different variances to what they're allowed to do. So definitely reach out to Jamie and Julia after this with your scenarios. So Julia, what are your real life examples? I'm sure you have a few.
Yeah, definitely. So yeah, I mean, in the non-QM product, a lot of what we see is Fannie fallout or agency fallout of loans that didn't work elsewhere. So a lot of times, it's important that we do move as quickly as we do, because a lot of times these loans are already, 15, 20 days into contract. We're just realizing now that it didn't work in an agency product. Okay, now we need to, flip this around and turn it quickly. So, one thing that came up recently was we have a full doc guideline for recent W-2 to 1099 conversion. So the loan officer I was working with didn't realize that the way that the borrower was paid changed recently. So he was W-2 at one company, and then he moved over to another company doing the same thing, but he was only 1099 for like 2 months. So we don't have the history of self-employment there. He didn't think that the loan was going to work anywhere, but luckily our full doc option, as long as you have history doing the same thing, allows for that very short length of self-employment for those 1099 borrowers. So that one went full doc. Pricing actually on a full doc non-QM loan wasn't even that far off from what they were getting on a Fannie loan. So that was, obviously a success there. Again, it closed quickly. And the other one I saw recently was a non-warrantable condo. So we do non-warrantable condos as long as it's only non-warrantable for one reason, and one of the reasons in our guidelines. So basically our guideline lists like the top 8 reasons why condos could be non-warrantable, whether it be the investor concentration or commercial concentration. It just lists those examples. This fit into one of those boxes. Again, they had a full file already, closed in 5 days. Like it was just, a slam dunk. And it makes the brokers look good when they're taking a loan that somebody else said no to and being able to do it and then delivering quickly.
Yeah, that's amazing to be able to help borrowers who literally were just W-2 and 1099. That was unheard of not that long ago. So there's a lot of borrowers that can benefit from products like that. So thank you so much. Okay, so let's talk about what makes a great non-QM lending partner. Not everyone can do non-QM. There's a lot of lenders that have non-QM products and play around in that market, but it may be a very small bucket. So what does REMN and the Loan Store do that makes you guys, apart from the rest and a good choice for non-QM? Jamie, if you could please answer that, that would be great.
Yeah, I mean, it's taking your time to understand the scenario, working through it, having a great process. We want everything to move as fast as possible, but actually taking the time to understand what's going on with the loan, any extra attention that might need to be paid, giving the underwriter a heads up of this is what we're looking at, and just somebody that really just wants to work with you and take the time to understand what's going on. It's probably the biggest thing. Process is huge, but actually having experience doing these products too, because there are a lot of lenders that are rolling it out. They have no experience doing this, and there's a lot of fallout from loans that probably still could have closed that were misinterpreted, things like that. And it just having a lender that has the experience to understand what they're looking at, things like that, underwriting staff that's experienced with it as well. So that's kind of what you're going to get with both companies.
Yeah, I would imagine just having underwriters that are in these types of loans often is really important for them to have the experience and being able to communicate what's needed and interpret guidelines correctly. So great. Julia, what do you think makes a great non-QM lender?
So I think non-QM, along with a lot of the niche products that we do, it's all about setting the right expectation. So when, my brokers who have never done a non-QM product come to me and say, what should I tell the realtor as far as closing dates? I say, this isn't the loan to promise a 21-day close on. Just set the right expectation so nobody's disappointed. Not to say that it can't happen. I've seen these close in a week, I've seen them close in 2 weeks, but as far as, somebody who's just dipping their toe into this space and learning the products as they go, I think setting the right expectations is a big thing. I like to set the right expectations with my loan officers and brokers. I never want to leave anyone feeling disappointed. So that's, one big part of it. And then communication is another one. I've so often heard from my brokers of, this deal went south here and my AE stopped picking up the phone and I couldn't get a hold of them. The underwriter didn't answer. I didn't know what to do. And I hear that so often. And as an AE, I just think like the easiest thing I could do every day is just pick up the phone. It's the easiest thing you can do. I think communication is huge. So, knowing that you're working with somebody that you can rely on that isn't going to, stop picking up your calls when something goes wrong, I think is another big one for, when you're doing these kinds of more difficult loan products.
Absolutely. You need to have reliable lending partners for these non-QM. They're already can be a little bit intimidating if you don't use them often. And so just having an AE and even an underwriter who can be there for you to kind of hold your hand through the process is really everything. So thank you for sharing that. Okay, so where do we source and market non-QM borrowers? If you guys can share, where would a loan officer go to get referrals for these type of products? And then how do you market these products to borrowers? Jamie, can you share your thoughts on that?
Yeah, so one of the first things is social media, as far as like looking for investor groups. Those are big. There's a lot of Facebook groups that are for real estate investment, first and foremost. Attorneys are another good opportunity, whether it's public accounting attorney or divorce attorneys. They're all a great resource. One of my favorite ones is title companies. Reaching out to title companies, sometimes they'll cooperate and give you a list of cash borrowers. And that right there is a huge opportunity to flip that into some other type of lending products right there, getting them their money back on their initial investment so they can buy another property, things like that. So there's a lot of different ways that you can look at getting business out there.
Very interesting. Okay, great. Julia, what do you think about this?
I found, especially with the bank statement programs, CPAs are a great place. So accountants, CPAs, anyone who's preparing tax returns, if they're preparing returns, they know exactly who's going to qualify based on the income they're claiming and who's not. So I think, even if you just go on Google and look up like the 3 closest CPAs to you and go build relationships with them, drop off your business card, drop off some flyers, say, hey, I can do loans for people who are self-employed and maybe aren't claiming all their income. And if you, run into somebody in this scenario, please give them my information. I think that's a great way to source business and, building those relationships with whether it be attorneys or title companies or accountants, it's always a good idea to have that networking relationship with people in your area.
Definitely. With my years as an AE, it was amazing how many financial advisors decided to become loan officers because they were just giving away business, so much. They're like, how do I learn how to do this? I feel like I should be doing loans myself. And so they are a great resource. A lot of them don't want to get into this business. It's a little bit more complicated than it used to be. So I think partnering with financial advisors and CPAs is really smart. And even though it's a little bit of a dark turn with divorce attorneys, I mean, how smart is that? There's so many people that are going through those situations and still need loans. They still need to maybe refinance or purchase a home. So I think that's a great outlet for sourcing these types of borrowers in this market. I love that. Well, great. So let's kind of recap any key takeaways for brokers, on this topic. Anything you just want to share that they take with them in the future after this call and apply. And then also maybe if you want to plug any other special products that you guys have, you guys do have some other really cool products that we didn't necessarily have time for in this webinar, but I would like you to share with them a little bit. So if you can kind of start, Julia, that would be great.
Yeah, definitely. As far as, recap or what to take away from this, if you take away anything, again, definitely before you turn down a loan that you think doesn't work, try a non-QM product, whether it be, the DTI ratio is too high or, the credit's not working, whatever it may be, definitely look into a non-QM product before you turn down any loan. it's always worth a shot, even if it's just, takes an 8 to 10 minute conversation with an AE that does non-QM, like definitely try it. And as far as, brokers who don't do non-QM, I hear that a lot from like, especially top producers, people that are doing, 100 million a year. They say, I don't do non-QM. I don't need that. I have enough of the good loans or enough of the vanilla loans. I don't need to waste my time with these niche products. I hear that so often. And I just don't believe that anyone in 2022 or 2023 has enough business to just turn away perfectly good borrowers. And to be perfectly honest, a lot of times the non-QM loans are the highest loan amounts that you'll see. So I don't think it's worth turning away from, take an hour, read some guidelines, educate yourself on the product. It's worth knowing. As far as other products that REMN does, so we do renovation loans, we do HELOCs, whether it be standalone HELOCs or piggyback. The HELOC product has actually become a really big one for us. So it's a fully automated HELOC, borrower applies online, no appraisals, no title packages, all remote closings, and the brokers get paid a point on it. So basically you're getting paid a point for just sending the borrower the link to apply. So really cool product. Reach out to me if you, have a need for that.
Great. That's awesome. Thank you. And Jamie, do you have any takeaways for brokers from this webinar on non-QM? And then do you have any other special product offerings that the Loan Store has? Yeah,
absolutely. I mean, the biggest takeaway, as Julia was referencing, is like there's not enough business to say no to. Non-QM borrowers are great, and the loan amounts do tend to be a lot bigger as well. So there's no reason that you shouldn't want to go after that business. And if it's just not understanding, you can reach out to me, you can reach out to Julia over at REMN. People that'll take time to actually explain things to you if you're unaware, show you what your different opportunities are. The Loan Store, we are more of an A-paper lender, but again, we still offer these products. We have great execution on them as far as pricing and minimum guidelines. So there are opportunities, whether it's with us or another lender. It is just another avenue for you to get business out of. And it's something that you should definitely pay attention to. It's just educating yourself and reaching out to people that can help you with that as well to strengthen that channel of business for you. As far as other things that we do, we have a wholly owned subsidiary called Old North Capital. They do fix and flips, bridge loans and construction loans, and they fund those loans usually within just a couple of days. It's simply just filling out an application and you make a point on those. So very similar to something what Julie was saying, but that's a huge opportunity. We do quite a bit of business through there, especially on the fix and flip side. So if you got any questions, feel free to reach out to me.
Wow. I think fix and flip, construction, and HELOCs are huge for our brokers to have. So thank you for sharing those. You guys can definitely reach out to Julia and Jamie after this. We'll share their contact info. And then I think we have some questions in our chat box. Harish, are you able to kind of share those? I'm not able to see them on my end.
Yeah, so we have some great questions. If anyone has any questions, please enter them in the Q&A tab at the bottom. We are going to take them now. I'll start with one question which I have that I get asked all the time. Can you share something about the rates? How higher are rates for these programs, with respect to conventional Fannie, Freddie? Any guidance you can provide, like from a rate perspective, how much high these programs get?
Yeah, a lot of it's dependent on the FICO LTV combination. Once we start running into the lower FICOs, the higher LTVs, you could be 2.5 points higher than a Fannie loan. Could be, with the higher FICOs, lower LTVs could be like a point and a half off from a Fannie loan. Either way, in any scenario, you're going to be higher than an agency loan. That's, non-QM's a higher risk. You're going to be higher no matter what. It's just a matter of what that spread looks like, depending a lot on the FICO and LTV combination, especially if you get into like non-warrantable condo land or debt service less than 1, like once you start adding on those risk factors, you're definitely going to be higher price, but really, highly dependent. And again, if anybody wants pricing or scenarios, things like that, it's, something we can price out and talk about.
I have a question just tagging on to that. So are all of these products something that they could access in the pricing engine on your website, or some of these sort of behind the scenes that you need to manually quote for them?
Yeah, so I'll speak just for REMN. Our pricing, it's all in the pricing engine. As far as non-QM goes, there's different templates in there. When you open our pricing engines, you just want to choose a non-QM template and then type in your details as far as like LTV and FICO go. But yes, it can be priced there.
And a plug for ARIVE, you can price these in ARIVE as well. So if you put in a scenario, we are going to search both REMN Wholesale and Loan Store and show what programs are qualifying, what are their rates, what adjustments and hits got applied. So whatever you can see on their website is available in ARIVE as well. There was a question on, are we going to show ARIVE as how do you structure a non-QM loan? Not in this session. If there are questions on ARIVE, we do have live trainings every week, office hours, so you can sign up for them, and we have experts which can help you, go through any questions as regards to ARIVE. All right, and another question which is tied to what kind of highest LTV are available on your bank statement programs? Maybe both Julia and Jamie, they are the most popular programs. So what's the highest LTV do you go to?
So at the Loan Store, we go up to 85% LTV. That's where our cap is. Again, we're a little bit more conservative on the product just because we tend to give a little bit better of a price. So we're a little more conservative on that front.
We go up to 90, although fair warning, with pricing where it is now, it is tough to pass QM in the 90 bucket. Not to say if you're, a high FICO, no other adjusters that it can't be done. And not to say that in, a week or two price improves that it can't be done. So right now the guidelines allow 90. I think a little bit more realistic is probably 85 as well, same as Jamie said, as far as passing QM.
And these products over 80% don't have MI, right? These are no
Correct.
MI products under non-QM. Okay, perfect.
Are you guys thinking of building buy downs for non-QM, maybe sometime in the future?
We are actually, yeah. I've been talking to our head of secondary, who's been going back and forth with a couple of our investors, trying to get them to do 2-1 buy downs. Right now, we just started doing them on Reno loans, which I think is a cool thing, but not on non-QM yet.
We do have 2-1 buy downs, just not on the non-QM stuff.
All right, and another question Kara is asking, I think this is what you answered, like before you submit the loan, you should calculate the income and contact AIF so that you don't put a lower income on 1003. So I believe you did answer that, Julia. Anything else you want to add? Like any mistakes brokers should not commit before they do a submission, because you cannot unsee what you have seen, as you mentioned. So anything else you would like to add there? So.
Yeah, I would just say, our income help desk is super quick to answer, whether it be a bank statement calculation or a 1099 calculation. They're really quick to answer. It's always worth just, taking the extra couple hours that it's going to take for them to answer the calculation and, know before you submit the loan exactly what it's going to be. But yeah, if you're not sure, if you're new to non-QM or your first couple deals, definitely come to me first, whether it be an income question or, anything else scenario related.
Harish, would you mind just sliding to the slide that has their contact info, just so that while we're talking?
I think so. Yes. So sorry, good idea. So this is their contact information below. Feel free to reach out to them with any questions and comments, any guideline questions. I'm sure they'll be happy to help you with that. So okay, let's see if there's any question. We have a lot of questions. I'm just skimming through that. Any training resources? Kim is asking if any of you can recommend, if employees have never done non-QM, how do they get trained on the process? Anything both of you can recommend on that?
I would always say just reaching out to your AE first. I mean, we do put trainings together to do things like that. But always the first and foremost, reach out to your AE where they can give you that individual time, help you understand the product, things like that. When you do group sessions, it's effective, but always getting that one-on-one attention is probably going to be more beneficial than always just sitting in like a classroom type setting. That's what I would recommend first and foremost.
Yeah, as far as trainings go, we have recorded trainings on all of our products that can be sent out. But honestly, I prefer to set up trainings with my brokers, whether it be teams or individual branches together. Anytime you get a group of like 8 or 10 people, or we can do a little Q&A and keep it conversational. I think that's the time where people learn the most, rather than just like sitting and listening to a webinar. I could, of course, talk ad nauseum about non-QM for 45 minutes, but I think that'll probably just put everybody to sleep. So we'll take it case by case.
And we are hearing a lot of praises. Many of our audience are telling both of you guys are amazing, and this session has been extremely valuable. So good to hear that. So there's a question on appraisals. Are transfer appraisals accepted? Andy is asking, can any one of you share insights on that, on appraisals?
The Loan Store will take transferred appraisals on bank statement and DSCR.
Yep, same here. We take transfer appraisals on all our products.
So Sammy is asking, for a non-experienced investor, will you take foreign nationals on your DSCR products if someone is not very experienced?
We do not. So we specifically require landlord history. There is an exception to waive the landlord history, but it does not work for foreign nationals. So a foreign national would need to have a 12-month landlord history, can be proven with an old lease, doesn't have to be recent, you know, could be 20 years ago, but they need at least 12 months management experience.
The best answer I can give is we are exception based. It just depends on the strength of the file itself of if we'll allow an exception for it.
All right. So there's another question on will you refinance all the 15 properties with one loan? So Craig is asking. So Jamie, do you want to take that? So
that I can double check. I don't know off the top of my head right now if we would, but I could double check if somebody wants to shoot me that in a phone call or an email or something. I could definitely double check that part for you.
So yeah, if you are new, I think we have several questions. If you're a new to non-QM, definitely you have their contact information here. Reach out to Julia and Jamie for any further questions on bank statements, you know, guidelines and ratios and income calculations. You know, so I'm going to skip over all those questions over here. So where are these guidelines posted? Can they go to your website and find them, Julia and Jamie, for the programs you offer?
Yep. Yeah, it's on our website. Could be the external website or the broker portal. They're posted both places. So if you want to go to remnwholesale.com, click on products, and click on non-QM. It's all in there.
Yeah, we have a training link on loanstore.com that'll give you all of our products, guidelines, videos, and everything like that as well. And on top of your AE as well.
So what about the seasoning or cash out on cash outs for DSCR? Any seasoning requirements you can talk about for your programs?
6-month seasoning for cash out for REMN, and we have a delayed financing exception.
Also 6 months, max cash out is 500,000 with us.
A very interesting question. How does EPO work in case of non-QM? Is it same, whether it's conventional or there are different EPO timeframes for non-QM programs?
So
early payoff, go ahead.
Yeah, same 6-month EPO for us. Although I will say, I have not seen it exercised if the loan comes back to REMN.
Okay, I got to stop piggybacking off of Julia's responses, but it's the exact same thing. So it is 6 months, but we aren't always the fastest to enforce them.
All right, so this training will be posted online on our support website. There are several questions on that, so I'll repeat that along with this presentation, so you can watch this video online maybe by end of the week, and we'll keep everybody posted. Anything on the fees you can talk about, the standard fees for these programs? Are they higher? They are similar to agency loans? Anything you can, like the admin fees and underwriting fees?
For the loan store, they're similar. It's a $9.95 admin fee. But there's no extra charges or anything like that for doing these or anything. So you don't have to worry about that.
Julia, do you know about REMN? Are the fees consistent with other programs or they're different?
Yeah, the only thing different non-QM is it's $200 more in the underwriting fee. That's the only difference.
Which is not very uncommon. Even we see that even on the processing side, you know, the fees for processing these loans tends to be a little higher, like by $100, $200. So which is what we also expect. So this is a more technical question, but I'll still ask for bank statement and profit and loss loans, will the debt be deducted to calculate the income from deposits, or how do you calculate income for these loans is a better way to ask that. So.
Yeah, so for bank statement loans specifically, basically the way that you calculate income is you are adding up the deposits each month, and then you're taking an average. So let's say you deposit $20,000 every month. That's your average over 12 months. Then we apply an expense ratio. So like first we default to a 50% expense ratio. So you'd have $10,000 a month in qualifying income. If that works, great. If it doesn't work, then you could get a CPA letter stating a lesser expense ratio. So if you got a CPA letter stating only a 25% expense ratio, then we'd be able to use $15,000 a month in qualifying income. So you're just adding up the deposits, taking an average, and then applying your expense ratio.
Same here, 50% expense ratio. Same with CPA letters. We will do a liquidity test as well. If we're failing both of those, they could try and do a liquidity test to see if that'll balance it out. If it doesn't, then we can't do the loan, but if the liquidity test can, then we can look at moving forward as well.
All right. Are there any restrictions on how high the loan amounts can go? Like for these programs, can you go 2 million, 3 million? Is there any limits on how much these loan amounts can be with both of you?
The loan store for DSCR is $1.5 million, and for bank statement it's $3 million.
Yeah, we're 3 million for full doc bank statement 1099. And we can go up to 3.5 by exception, and then debt service, we're max 2 million.
Oh,
All right. I believe last few questions. Are there any seasoning for the business itself for the P&L loans? Like I believe they're asking how long the business has to exist. So
Minimum, so for our P&L product, it's a minimum 12 months for the business to exist. And then we would need, if you're between that 12 and 24 months, they just want to see history in the same line of work.
how about you, Jamie? Do you have anything to add?
We don't
Or
have a
piggyback
P&L.
there? P&L. Oh, you
No
don't have.
P&L.
And how about ITIN? Someone asked you. You guys do ITIN programs as well, or at this point, no?
No.
Yeah, we do not. You'd have to fit into one of 3 buckets for us, either US citizen, non-permanent resident alien, or foreign national.
I see. If someone has a second mortgage, does that lead to any complications when offering these programs? So let's say somebody's trying to do an investment but has a second mortgage. I think all these questions should be checked with your scenario desk. Is that accurate? Like if there is a complicated situation or something.
Yeah, I see that. That's a Neil's question. I do see
Yes.
that one in there. I think he's asking if we can do a DSCR program in second
For a
lien
second
position.
mortgage? I see.
Yeah, as a second mortgage. So we can't. We have our HELOC does second home and investment as well, though. So that's probably what you'd be looking at.
And your scenario desk should be able to answer these questions very quickly, right? If there's a situation, a specific, it's not qualifying with agencies, is that?
Yeah. We have an underwriting team that's dedicated to it directly. So they would be getting all those answers for you.
Yep. Yeah. As Jamie and I think both said before, definitely come to us first with questions. And then if it's something that we can't answer, we can always go to the scenario desks.
All right. I think we covered all the great questions that were asked. So Amy, do you want to conclude this?
yes, thank you so much. I mean, my takeaway is just that there is a lot of support out here for you. You are not alone. There's a lot of great products. So if you're working with a borrower that's outside the box, so to speak, don't just assume that it can't be done. Contact the loan store, contact REMN, see if they can help you structure it and put it together. So thank you so much. And I hope you join us on our next call in February.
Awesome.
Thanks,
Thank you,
everybody.
everyone. Thank you.